Hey, Papa Trades! I want to do a video analysis update of the stock market. We've had three really bearish Septembers in a row. So, just as a reminder, I use long gamma positions. In this case, they're called long guts positions on an ETF called METV. And recently, I rolled my options positions essentially to the point where the biggest downside exposure I have right now comes from these long gamma positions on METV. They are the 11 put and the 10 call for the mid to late November expiration for that ETF. I also have the 12 put and the 12 puts and the 11 call for the mid-February expiration. I also have paired with that the 11 put and the 10 call for that February 16th expiration, and also the 10 put and the 9 call. So those positions are called long guts positions. They each have $100 in intrinsic value, which means that's the minimum I'd expect them to be worth at their expiration. And they also each give me unlimited downside and upside exposure to a pretty high beta growth ETF. That's how I get kind of that crash, that crash nonsense prepared for, and also that melt up exposure. That's the beautiful thing about long gamma positions. And that's what I do to get unlimited downside and upside exposure. That's kind of that, the market's going to have a crazy move preparation, right? And that's what keeps a lot of people out of stocks. It keeps a lot of people out of investing, because they're afraid of that volatility. But that volatility is kind of where, all the gains come from. That's where, the price is paid, so to speak, right? But there's also a lot of money in selling that volatility. And, one thing I was thinking about for this video is I didn't really know what to talk about because I think we're in a pretty, boring time in the market. I've said in my, previous videos that I think we formed a 1-2, 1-2, wave 3, a wave 3 from this low. This is characterized by having a wave 3, shallow wave 4 corrections, and wave 5s higher. Shallow wave 4 corrections and wave 5s higher. It's not very exciting. It's kind of known to lull people to sleep, right? Get people to call the top and just kind of make a marginal new high. And I think ultimately, there's been quite a few leading indicators from the value sector, from the tech sector, from the industrial sector that really supports this idea. One day, I don't think too far away, we're going to see the S&P 500 go make a thrust towards an all-time high. We've seen Microsoft at an all-time high, Nvidia, Apple, as well as SPYV, DRGW, and neither of those kind of confirm that. I think from this low, we've seen 1-2, 1-2, wave 3, a wave 3 develop. We had a shallow wave 4 correction. We're within a wave 5 higher. That should take us to an all-time high. The NASDAQ supports this as well. We haven't seen, this break to all-time highs yet for the NASDAQ. I don't want to be, too boring, but I think that this is just kind of a boring time in the market. And one of the themes I was thinking about for this video is that, a lot of people are looking for excitement, right? We've got football season coming around the corner. We've got, school starting for a lot of young people. It's kind of an exciting time. I think the NASDAQ from this low, this is a 1-2, 1-2, wave 3 of wave 3 as well. We had a shallow wave 4 correction. The length of wave 1 placed at the wave 4 low is what's been marked here. That would give a wave 5 target of about 411, which is just above an all-time high, which would lead Microsoft, which would lead the NASDAQ to do what Microsoft and Apple, and XOK even have done recently break to a new all-time high, right? It's not a crazy prediction, it certainly doesn't seem like it. What I have been thinking recently is that, kind of the more interesting, parts of the market are in this growth sector. Microvision, I saw they were buying the 2.5 strike straddle on Microvision. Just looking out at the big picture, I think my MVIS goes 1, 2, 3, 4, 5 from this low. So one thing I've been thinking about is in late 2020, we had the small caps IWM. They really hadn't played much catch up at all to big tech. And we had sort of these, kind of red periods. Which one of these is the low? 10.08, 10.12. So we had, these red periods in late August and early September in late 2020. And one of the things that ended up happening as a result of that was that a lot of the money had flown from the big tech winners, like Facebook and Apple and, stocks like that. And then we saw kind of a rotation in the small caps, oil, banks, in the fourth quarter going into the first quarter of 2021. That's quite a specific, rotation, analysis. I think in the big picture, this is 1, 2, 3, 4, 5 waves up for Microvision, an ABC correction, and possibly at this low. Sorry, I did not mean to show you guys. I was looking at time fibs from this low. I think there's very much a possibility Microvision forms, a wave 1 and a wave 2. So pretty defined risk for Microvision. Certainly kind of one of the whole points of a stock like Microvision is that it does its own thing. It kind of swings to its own, it sails with its own wind, so to speak. But I do think that a chart like this, I've seen, I'm just a little interested in the small caps right now. If there was something to be really interested in, with SPY at the 450s, I think in the big picture, this is a large wave 1, and a wave 2 that can end for Microvision. And so above this wave 2 low of 1.82, which isn't very far away, there's the potential for Microvision to go wave 1 and wave 2. Sort of reminds me of Beyond Meat and in Neo. We're just kind of from these daily lows, there's a potential, for a small wave 1 and a small wave 2 to have formed. For Neo, it makes the most sense. Wave 1, wave 2 from this low looks something like this. There's just kind of a small cap growth theme. And this sector hasn't really done much in such a long time that's kind of hard to believe, But I think what we could see is that some of these red periods we've seen have been a rotation into, some of these sectors. 7.30, wave 1, wave 2, possibly a wave 3. For Neo, that would take it up towards 18.38. K-Web in China, I've been pretty interested in, especially with the CLIP ETF, giving the possibility for covered calls in this sector. I posted about QFIN, KFIN recently, but I think for K-Web, bulls are going to look for this to be a small wave 1 from this low, a wave 2, and then a wave three to be developed. For that to be valid, technically, we need to be above 24.34. So again, I'm pretty interested in the KWEB ETF. There's been a lot of growth, kind of small cap growth on these screens. I posted about TSLL recently. Tesla, I think this is a wave one, and ABC wave two. This is another wave one and another wave two. I think I've got these fibs on this bigger weekly chart. I'll move them in. But basically, this is wave one and wave two. This is another wave one and another wave two. For that wave two to have already ended, 212.36 is going to say that's done. If that's the case, bulls are going to look for this to be a wave one and a wave two from this low. And so if Tesla does make another new high, the more conservative argument is that this is 1, 2, 3, 4. So Tesla's going to make a new marginal new high for wave 5. Incorrect. In that case, that'd be 1, 2, 3, 4, 5. Large wave 1. Correction for wave 2 would be a buy before wave 3. The bears are going to say that 299.29 won't ever be broken. Now, it's really important to remember that they're saying that right now. It's really important to remember they're saying that right now, because if it does go, we're all going to forget they said that was going to happen. And the reason it matters is because if that does happen, then this is at bare minimum, no pun intended, 1, 2, 3, 4, 5 waves up from the low. Be very hard to argue this isn't 5 waves, which even if there was a correction would be 1, 2, 3, 4, 5 waves up. Wave 1, wave 2, wave 3 would be quite the opportunity. What I actually think this is going to be for Tesla is that this is wave 1 and wave 2, and this is not a wave 3 and a wave 4. But Tesla's going to make a new high in price. And on the weekly RSI, I suspect Tesla's going to break above 70.19 on the weekly RSI. And that's going to confirm it's 1, 2, 1, 2, wave 3 of wave 3. Which basically, not to oversimplify, takes Tesla to NVIDIA town. So that's all going to be valid if Tesla's above 212.36. 208.49, the 61.8% retracement is a little wider, and those are the most meaningful levels right now. I think another interesting chart for Tesla and also growth world is what can be going on with ARK. So if we look at Tesla, ARK, Coinbase, Disney, Amazon, even very recently ExxonMobil, all of a sudden there's been a whole new opportunity to go about investing in these stocks, at least from my perspective. A stock like ARK, for example, with OARK, now kind of has the opportunity to go from a very speculative investment to something that is going to be one of the biggest income producers in my portfolio. Tesla, very similar. Coinbase, very similar. Amazon, very similar. And of course, I'm referring to these yield max ETFs. I think for ARK, this is a wave 1 and a wave, and also with CLIP and KWEB, right? All of a sudden, China goes from one of the most speculative, scary growth investments, is this dead money, to, very quickly one of the biggest income producing holdings I have. In theory, I could reinvest that dividend and keep growing my asset base and just keep twirling my thumbs, right? Until, some of these more volatile growth investments start to bottom out. I think for ARK, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2 between the 61.8 to 78.6% fib. 34.72 is a little wide of an invalidation, but similar to Tesla. If ARK does make a new high and break above 65.14 on the weekly RSI, that's going to confirm 1-2-1-2, wave 3 of wave 3 in progress. That would give a lot of underlying premium for OARK to collect. It would be quite similar with what I've talked about in recent videos with Coinbase. And Coinbase has the highest implied volatility of all the yield max ETFs. So, this is really where, I'm kind of thinking one, kind of thing I have going on with Tesla and Tesla, ARK and OARK, very soon Coinbase and Coney, CONY. That would be kind of a middle of the month paycheck, and there's obviously other yield max ETFs where that same kind of combination could be ran with. I think Amazon and AMZ is pretty high up there. If there was a correction in oil, XOMO dropped recently. Disney could be a very interesting one for various reasons, but Coinbase and Coney, I think Coinbase and Coney is especially interesting because this helps indirectly sell premium against the crypto space. It kind of helps monetize, that high implied volatility of the crypto space. Coinbase and CONY, as well as, there's another ETF called Maxi, MAXI, that sells credit spreads and also has long exposure to Bitcoin futures. For Coinbase itself, I've posted about Mara and Riot recently. Very, interesting week, for Bitcoin. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 for Coinbase. Bulls are going to look for it to go make a new high in price and also break above this weekly RSI of 68.56. I think that Coinbase has a little bit of evidence from Mara and Riot and also MicroStrategy in that they form a very clear 1, 2, 3, 4, 5 waves is what the bears are going to argue. So one way to look at this is that this is 1, 2, 3, 4, 5 waves up. So this is a large wave 1. This is a wave 2 correction. Riot begins wave 3 of wave 3. I think the more accurate way, if we look at this RSI down here on the daily RSI, the rule that wave 5 ends with momentum divergence for MicroStrategy and Mara suggests that this is not 1, 2, 3, 4, 5 waves up. It's 1, 2, 1, 2. Yes, another wave 1 and another wave 2. Wave 3 of wave 3 in progress. For Riot, the invalidation of 9.42 is not very far away. For Mara, MARA, it is a little far away, but it's very much the same idea. We'll talk about Bitcoin too. What I do think though, when I was talking about Coney and Coinbase, is that it's kind of a very similar setup with Coinbase. Now Coinbase has its own special stuff going on. It's a little different than Riot and Mara. I think it's a lot different than Riot and Mara. That's probably fair to say. But what I'm interested in is that Coinbase and Coney now give me options to sell that premium that's very high in the crypto space. And especially if I think that over time, Coinbase is going to need Bitcoin to go up with it, or even that Bitcoin's more likely to outperform Coinbase, which is a definition of a pair trade. Coney now helps me indirectly hedge crypto by selling an awful lot of premium pretty quickly. I think for Mara, this is not 1, 2, 3, 4, 5 waves up. And there's a few reasons. One is that RSI rule. Another is that this is the biggest wave from that low, and typically only commodities will allow wave 5 to be the biggest wave. Mara is one of the more clear 1 2 1 2, and yes, another wave 1 and another wave 2. 8.47 is a pretty useful invalidation to say this is a wave 1 and a wave 2. Mara is going to enter wave 3 or wave 3 into the upper 20. So let's say this does happen and Coinbase participates. Well, what happens with Coney and Coinbase if I'm kind of pairing them together, which I am, we could see, first off, Coinbase's implied volatility right now is at, a 52-week low, right? The IV rank is 0% right now. Coinbase's IV has fallen to 61%, which is still a lot higher than Tesla's, and it's a lot higher than ARK's, right? So that's where, YieldMax is going to be getting, the implied volatility from. But what could happen with Coinbase? Well, what could happen with Coinbase and Coney is that like Mara, like Riot, enters wave 3 of wave 3, so it gets up here, right, up to into the 120s, and implied volatility is very high. So kind of the classic wave 4 setup. The classic wave 4 setup is that Coinbase and Coney go sideways for wave 4. Implied volatility is really high, and it consolidates into a bull flag for wave 3, wave 4, and wave 5 higher. The whole point is that with these new YieldMax ETFs, I now get to kind of anticipate collecting a lot of premium during this time. Whereas before, I would have considered this dead money, and I would have really needed to, consider taking most of my profits here. Here I could reinvest, dividends from Coney and, keep getting a nice amount of premium. And so that type of thing, right? Tesla and Tesla, right? A very similar idea, right? If it enters wave 3 of wave 3, and even with Tesla now, there's even a new ETF called TSLH, which I haven't really looked too much into, but it even has, buffer protection, for downside for Tesla, over a 3-month period, I believe. So, right, if Tesla entered wave 3 of wave 3, right, and it got up into the 350s, and the implied volatility was really high here, I could see, a shallow, these, numbers are going to be real small on the screen. I could have a wave 3, target, a shallow wave 4, and a wave 5 higher, right? So these are kind of the new opportunities being opened up. I think Disney is a very interesting one. Disney's book value is about 1.47, so it's only 47% above its book value right now. There's an ETF that sells, options premium on it. It makes Disney, a completely new opportunity compared to what it was before, that ETF dropped. XOMO for ExxonMobil, a very similar idea, so that's really what is most on my mind right now. The other thing is that I like KWeb, I like Clip, I like SVOL, and there's also a lot of ETFs, like, PutW and PFFA, and, maybe PFFA wasn't the best example, but there's a lot of ETFs that pay their dividends at the end of each month, right? So in the YieldMax ETFs, they pay their dividends in the middle of the month. So one thing I've been doing is kind of getting these big dividends at the end of the month, getting these big dividends from YieldMax in the middle of the month, and they're about 2 weeks apart, just in time for me to reinvest one of them before the next one's ex-dividend date. So that's kind of, really what I've been thinking about right now. That's Tesla and Tesla. There were a few off of this bar chart straddle and strangle screener I was looking at. I posted about Rivian recently. Fisker is a very similar idea in this sector that I've seen on the bar chart straddle and strangle screener recently. So Fisker, like Rivian, like Lucid, like Neo, pretty risky and volatile in the growth space, but I think there's a interesting setup for Fisker. I saw this, they were buying the 6 straddle on Fisker, which I thought was an interesting decision. I think that they're using a long gamma position to accumulate Fisker against those $6 puts. And I think that from this low, you can see Fisker form a nest. Wave 1, wave 2, wave 3 of wave 3 begins. So I think we break above this high. That means we should at least see Fisker hit 7.50 in the future. I think it's actually going to enter wave 3 of wave 3 and head up towards that minimum wave 3 target is about 7.78 before a shallow wave 4 and a wave 5 higher. I talked about Microvision. OpenAI, kind of in the hype train. I saw this on the straddle and strangle screener recently. You know, they say avoid things that are new and shiny. But what OpenAI could be is a little premature right now. I'll say why in a little bit. But I think this is wave 1 and wave 2. And what this could be, the reason I say it's premature is because the length of wave A placed at the wave B high has not yet been met for wave C. But if OpenAI did go get down to the 100% extension, which is 27.50, that would be where bulls look for a wave C to end. Now, there are truncated wave Cs, which is the fancy way of saying wave C doesn't reach the length of wave A, placed at the wave B high. That could certainly happen for OpenAI. I've been, if it did get down to the mid 20s, I'd say this is an ABC correction, and bulls are going to look for a wave 3 to be entered. So that would be an interesting, thing to happen if that did. I guess just to summarize, in Roman mythology and Greek mythology, they have something called in medias res, which is, it means in the middle of things. I think the market right now is in the middle of things. This is XLK, this is a wave 3 and an ABC correction for wave 4, a 1-2, 1-2, wave 3 of wave 3, and it ended, right? We ended wave 3 of wave 3. We had a shallow wave 4 correction, and now we're within a wave 5 higher. The length of wave 4 placed the wave 5 high, takes XLK up to 188, not too far away, right? But the stop isn't even really that far away to invalidate wave 4 ending, which is 162.94, right? So we're in the middle of things, and without, even on XLK, there's an ETF from Global X that runs the half right on the technology sector. There's QYLG that runs the half right on the NASDAQ, So now there's opportunities to, play these, marginal wave 5 highs before consolidation periods for, a wave 5 that ends wave 3, a shallow wave 4 consolidation period, and a wave 5 higher. I think really, in the back of my mind, it's, you don't want to be the guy who cried XLF and IWM rotation, but I think that, the idea that XLK takes a marginal wave 3, a shallow wave 4, and a wave 5 higher, and that we see kind of, I hate to say the word rotation, right? But it kind of, the charts are setting up for small caps, maybe a little bit of growth. There's a lot of financials and oil and energy, in the Russell. That might be where we get a little bit of rotation. I keep thinking about in late 2020, we had that, red September period. It wasn't quite, like this year, but, could we have been rotating into small caps and banks and, oil, during all these red periods? I think that's certainly, a possibility, as far as big tech, in the market goes. I am expecting that, the S&P 500 is going to go, fill out the right side of the base, follow, Microsoft and XLK, 1, 2, wave 3, wave 4, like XLK, the length of wave 1, place at the wave 4 low. We could see the S&P 500 hit a new all-time high. Wouldn't be anything sexy, but in this world of covered call collection and premium, we'd see a little bit of unfolding. Maybe something like this if I had to get cute. Oh man, that was too cute. There we go. All right, I'll go full guru. From this low, large wave 1 and wave 2. So I believe a big wave 3 is in progress. Ultimately, I expect that big wave 3 takes SPY all the way up to 600. From this low, I think it looks something like this. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. We ended wave 3 of wave 3. We ended wave 4 of wave 3. We're going to end wave 5 of wave 3 near an all-time high. That's wave 5 of wave 3. We'll have a shallow wave 4 correction and a wave 5 higher.